please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, the saga will go on. Good morning, everybody. Welcome to Bazaar Morning Call. I'm Lata, with me Anuj and Sonia. Well, actually, we have an extremely cheerful global market. The important number that we all have to concentrate on, especially when you're looking at the markets, is that the United States has posted lower than expected inflation numbers for the latest month. This is as Goldilocks as it can get. It's fiery growth that we are seeing in their earnings, and everyone was so scared that with crude and other metals rising, you're going to have an ugly inflation number. Would it be 4 rate hikes? No, it is even lower than what the previous trajectory was. So at 0.2%, the US is very far from having a higher number of rate hikes. That positive cheer, of course, is there across all markets, but I guess that would be enough to lift our mood as well, which had gotten soured considerably yesterday because of a mix of oil and bond yields. The earnings season has been pretty mixed. At least the last 24 hours have been okay. I mean, Titan was in line. So much is in the price already. Asian Paints was good. Z was actually subpar, and the banks are a disaster. So it's not as if the earnings season is giving us, over the last 24 or 48 hours, too much cheer. But the global cheer is definitely there. And just one more word for us to mull over the next few days. 92-year-old Mahathir has come back as the Prime Minister of Malaysia. And guess why he got elected? Because he said he will abolish GST. That's something to chew.
Okay, well, old is gold, right?
No, but against GST, now that's a little scary.
Okay, well, Lata, hi, morning. Anuj, morning. I take your point about how the result season has been a mixed bag, but I think the one takeaway is that there's been a good, growth seen in the consumption companies. If you look at the volume growth, I mean, Asian Paints saw 10% growth in volumes. Nestle reported 400 basis points margin expansion, and even some of these other consumption companies, Apollo Tyres, Ujjivan, reported quite a good. I mean, Apollo Tyres India business was very strong. 16% volume growth is something we haven't seen in a while. So I think this is something that the street may take with both hands, considering that many of these stocks have been good performers over the past few days. Anuj, morning. What's the sense you're getting? This has been a buy on dips market, but you think that could hold now and in the new series as well?
Morning, Sonia. Yes, before that on results, I think really Ujjivan was the one which really posted the number, absolutely strong. And I think it would really be your stock of the day.
All microfinance companies have done exceptionally well, but they had a terrible base.
Exactly.
That was one.
Exactly. But, over the last 3 days after that, Kotak report, there was some shorts which got built in. And I think now, first half of the move could only be purely because of short covering. But the market's basic texture, and I was telling this to Surabhi also yesterday when the market were closing at the low point, that it is still buy on dips for large caps. So that texture has not changed. But the market has given a warning sign now once again for mid caps. Yesterday, day before also you saw that move. The big question for traders today would be, do you chase the gap up? First of all, I don't know if this SGX Nifty is once again one of those factors where, it's wrong and the actual market opening is somewhere else. It should be chased only if you cross 10,785 convincingly. Why is 10,785 important? It was yesterday's high, and it was also May 2nd high. So it carries the risk of a bit of a double top if you don't take that out. And series low of 10,601 is now your sacrosanct stop loss. The late weakness in Bank Nifty, of course, was on account of weekly expiry. But I still believe that for a positional trader, Nifty IT offers a better risk reward than the Bank Nifty, because Bank Nifty has had a big rally, and a logical stop loss on Bank Nifty is now 500 points down. Can you do that? On the Nifty IT, it's not that far away. And one more point. If the market opening is good, just like the SGX Nifty is indicating, then a lot of mid caps will fly today, and the temptation would be to again chase them. You need to avoid that temptation. The mid cap rallies would be an opportunity to get into large caps. I mean, this is not true for all mid caps, but at least the poor quality one, leveraged ones, you need to move to large caps. But as we discussed yesterday as well, that till the time tape tells you that something has changed, even if you want to be a reluctant bull, you have to buy on dips.
Yeah. Since you mentioned the Nifty IT, I just want to mention also, Emphasis came out with really good set of numbers. I mean, since Nitin Rakesh has come on board, maybe things have improved, but it's been 4 consecutive quarters of very strong revenue growth. So maybe these are some of the stocks that you'd want to take a look at. But let's also tell you what our wise experts have to say as we head into trade this morning, this Friday morning. Sakti Siva of Credit Suisse says, with the US bond yields rising to 3%, oil prices above $70 a barrel, and the Fed's preferred measures of inflation and wage rising, she wonders whether India could be the next shoe to drop and whether the next FOMC on 12 to 13 June will act as the catalyst. She reiterates the underweight call on India in an Asia-Pacific context. She says the current combination is of close to highest ever premiums versus the region. 4 consecutive years of downgrades to consensus EPS, current account deficit, rising oil prices, further pressuring the current account and fiscal deficit, and the fact that foreign investors have yet to capitulate.
No, there's no taking away from the fact that we have been underperformers for exactly the reasons she mentions. But then the world wind is so strong that, even in an underperformance, you're rising because, well, there's simply so much interest in buying. Well, let's get you money market views. Bhaskar Panda of Kotak Mahindra Bank says US has unilaterally withdrawn from the Iran nuclear treaty, pushing crude prices up, and Trump is also setting up a summit meeting with North Korea for a meaningful dialogue. He says as far as Indian markets are concerned, these are confusing signals. Hence, after the flurry of rupee depreciation, the USD-INR pair seems to be entering a phase of consolidation. For today, he expects the range to be between 67.10 and 67.30.
And for the bond market, as far as the Indian benchmark yield is concerned, Bhaskar Panda says various factors are at work, which include higher crude prices, volatile exchange rate, movement in US yields. Yet the 10-year benchmark yield has been trading in a range. He expects a similar behavior and the 10-year benchmark yield to remain within 7.7 to 7.75% for today.
Okay, decent global cues this morning. Here's Mangalam with the world view.
Good cues coming in from the world. If you take a look at the Wall Street, we saw a gain of almost 200 points on the Dow, the S&P as well as the Nasdaq gaining almost 1%. The gains on Dow were led by tech stocks. 6 straight days of gains for both Dow as well as the Nasdaq. Apple, Facebook, Amazon as well as Google parent Alphabet. Take a moment for Apple out here. Those stocks are at record high, and the market cap of Apple just 5% shy of the $1 trillion mark. Remember, just a few days ago, we celebrated TCS crossing the $100 billion mark. Here we have Apple closing in on that $1 trillion mark. It's not just the tech stocks. Crude oil spike has led the energy index higher by about 9% this month. That too is supporting the US indices. Macro cues fairly favorable. The inflation is lower than expectations. Jobless claims at a 48-year low, and as a result of that, we saw some softening come by in the US 10-year yield, which slipped below the 3% mark. Across the European indices, we saw some good gains come by, primarily on account of no change coming in the interest rates from the Bank of England. However, the one index that stood down was the Italian index, down about 1%, primarily because of some political concerns out there. The anti-establishment parties are forming a coalition to make the government there. And yesterday, the markets fell because the Prime Minister, Silvio Berlusconi, said he won't stand in the way of that government. The Asian markets in the green, the SGX Nifty, again, for whatever it's worth, it's indicating a strong start in today's trading session.
All right. Thank you very much for that, Mangalam. All right. Let's get to the other big news that we've been chasing all through this week. Competition heats up in the retail space after that mega Flipkart and Walmart deal. I spoke with Kishore Biani yesterday to get a sense of what the future group's strategy will be, and if they are looking for an alliance with the Walmart combine itself or with Alibaba. Let's listen to what Kishore Biani had to say.
I think we have known Walmart for a long period of time. In fact, we have learned retail, reading about Walmart, meeting them, visiting their various centers. So I think one of the largest retailers in the world. I think we all admire what Walmart has built over a period of time. So, secondly, we have looked at all the new retailers in the world, and I think as a student of retail, we meet people all around the world and share notes about businesses and share our knowledges and our experiences.
Well, you are sounding like you are not averse to such a deal, that you may strike a deal with them.
I am sounding that somebody has to get more from us. We are not going to get anything from them except for money.
Okay, but isn't money a good enough reason? It's better than disruptive competition.
Yeah, but then a financial investor also works for us. I think besides making a balance sheet stronger with financial infusion, I think in India we have a reasonably good base on multiple things. We have 40 factories running on producing food and grocery and HPC items. We have one of the largest supply chain on clothing in the country. We have built a formidable business operating into 55 cities, 7,000 rural towns. So I think we have to offer what we have created on a huge consumer base. 500 million people walk into our stores every year. So I think there are they have something to gain from us rather than we to gain from them at this moment in our life.
Actually, I was going to ask you, why not Jack Ma? In fact, there is a WhatsApp doing the rounds. Amazon with Shoppers Stop, Walmart with Flipkart, and now Alibaba with Future Group. I mean, are you speaking to Alibaba at all?
I think we are very excited with the way China is shaping up its own, what they call the new retail. In fact, one of my annual reports, I use the word new retail, not knowing that they have been using this word for a while. And I've seen the new models, what they have created. It's a very fascinating model. The way they have built the ecosystem, Tencent and Alibaba both, has been fantastic, I would say. And we admire the way that AI is being used, predictive analytics being used, the new stores, Hema, which they have created. I think there is so much to learn from China in the news retail space than from the West at this moment. But that doesn't mean much. I think we are learning from them, and we believe there are capabilities which can be built on our own. We have also created a retail 3.0 strategy, built small stores. Customers can order on WhatsApp, they can order on voice, they can order on the web. We are making home deliveries. We're talking of building up our own data lake, which is already up now, and we are getting into predictive analytics. All our store assortment is based on algorithms depending on the membership and the communities in which they live. So multiple use of technology has started at our end also, but I think the inspiration is coming from China more than anywhere else.
Yes, but are you toying with the idea? Are you speaking with Alibaba, giving them a 10% stake in your group?
I think, Lata, if you know the regulation of India, nobody can invest in us more than through a FPI route more than 10%, less than 10%, I would say. So I don't see whether any strategic makes sense or a financial investor makes sense. But we believe that alliances, collaborations will definitely get formed in some manner, whether financial or not.
Well, it's quite possible that Alibaba will be happy with 10% for starters, and then maybe some more stake when the rules change in India.
But why do we talk of hypothetical situations? I don't have a deal right now with me, and I don't want to talk about anything which is not in existence.
Okay, that was quite tight-lipped actually, but in as many words he did mention that there is some interest coming in from China. Let's see how that progresses. We'll be getting you snippets of that conversation through the course of the day. Interesting times ahead in the retail space. We'll come back on the other side with CNBC TV18's top 10 list of stocks to watch. Stay with us. Well, there's green across the global market screens. The Dow, as we told you, was up for the 6th straight day. The Asian markets are following suit. Hong Kong is now up more than 300 odd points. But there are plenty of stocks to look at in our own markets as well. Our research team is here with the list of those stocks. Plenty of result reactions as well. But first, Anuj, what are you looking at?
So, Sonia, before that, the Hong Kong market is up 400 points. But this week we have underperformed the MSCI Asia, Japan and emerging markets. So let's see how, whether that translates into a good opening for us as well.
Just a word on that. Would the market want to follow suit so much before the Karnataka
Exactly.
polls?
So
maybe it may just want to wait.
Yes, and a lot of rally has happened, and today could be. But anecdotally, you go into event with long positions. So,
so it may also pole vault.
Exactly. Let's wait for markets to actually decide that for us, and let's not preempt. Stocks to watch: Canara Bank. On a way down. Numbers today, I think Indian Bank's howler, I think, will keep the entire sector subdued. And, Indian Bank is the best of the lot. If the best of the lot is coming out with howler, the market will definitely worry about others. Now, of course, if there's any positivity in the numbers, the stock may surge also. But in the first half, at least, my sense is PSU banks could be weak. So keep an eye on that. The other one is Magma FinCorp. Yesterday, there was a block deal and the stock was down. But there's been buying by some influential investors. So that could mean that the stock could come back into the green today.
Well, if Indian Bank was a howler, you should look at Union Bank. The only difference is Union Bank was always underperforming.
Exactly.
So that's why it was not a surprising howler, but it was a howler nevertheless. Mangalam, let's talk of colourful things. Asian Paints, good show.
Good show, Lata. You know, they ran a campaign earlier called Mera Wala Blue. It could perhaps be Mera Wala Green today, primarily because the India decorative volumes, they grew in double digits as against expectations of 7 to 8%. If you take a look at the EBITDA as well, the street was working with a downside risk, but the company went ahead and posted 840 crores on the operational gain basis as against 830 crores with what the expectations were. The net profit, however, did not see that benefit flowing in, primarily because of two reasons. One, the other income was lower by around 30 crores, and the effective tax rate that came in was much higher at 37%. However, the management, the brokerages are pretty sanguine on the management commentary. Jeffries, for instance, says that the management calling out improvement in demand conditions is heartening to see after 3 quarters of underperformance, and Macquarie expects 13% volume growth in FY19. So these things should keep the stock excited. However, remember, it is trading at hefty valuations. Will be interesting to see how much of it is priced in.
Okay, Mangalam, thanks a lot for that. But what about Titan?
Titan, well, Anuj, strong operational performance. Total income came in higher by around 12%. We were working with a number of 15.5%. But if you just take a look at the EBITDA, the company posted an EBITDA of 455 crores. This versus expectations of 400 crores. The margins came in at 11.6%. The street was working with 10.2%. As a result of that, the net profit grew by 41%. However, remember, this 41% growth is slightly limited by 80 crores given there was an employee expenses, a one-time employee expense. If you take a look at the jewelry business, 13% growth there, 400 basis points expansion in the jewelry EBIT in this quarter, close to around 170%, 180 basis points rather, expansion in all of this year. The management said going forward, if they go ahead and post 20-25% growth in the jewelry business, margins stand to expand. And this is something that the brokerages like too.
Okay, thanks a lot for that. Well, we're not done with good numbers just yet. Anisha, Z Entertainment, an ad revenue growth of almost 22% this time.
Oh yes, Sonia, it looks like the stock will open up in the green because the company has surprised positively when it comes to the margins as well. So the margin came in at 29% versus an expected range of around 27%. Now, though the reported numbers are not very comparable given the business restructuring, but if we look at the internals, they are rather strong. As you mentioned, an ad revenue growth of around 22% on a like-to-like basis. A domestic subscription growth of around 18% is what is going to go down well with the street. Now, brokerages like Morgan Stanley and Credit Suisse are enthused by the numbers. They like the fact that the management has given a strong outlook for future as well. Remember, the management has talked about a subscription growth in low teens for FY19. They are expecting market share gains to continue. In fact, on that note, let's listen into the management themselves on what they had to say regarding the outlook.
On the advertising front, we do expect that the industry will be growing at about 11 to 12%, and our endeavor will always be to be beating the industry growth. On the subscription side, we are looking at low teens growth in the midterm, and that should continue. The margin will be sustainable at 30% plus, despite all our investments in the broadcast business or in Z5, which is our newly launched digital platform, plus the new markets that we want to enter in the regional space itself. All put together, we still are very confident of delivering a 30% plus margin. We keep evaluating acquisition opportunities as and when they arise. Definitely, we will be continuing to look at opportunities in acquisition, whether it be on digital or in traditional form of content, whether broadcasting or content creation. We do not have anything definite to talk about, but as long as any of those acquisitions add value to our business and help us grow faster, we will definitely consider them.
Okay, thank you very much for that, Anisha. But I think the blockbuster numbers today, the stock to watch today, stock of the morning perhaps, is Ujjivan. Abhishek?
Well, Lata, they have reported the best quarter in last 5 quarters, whether you look at balance sheet growth, P&L growth or asset quality. So coming on to balance sheet growth, the disbursement at 2,262 crore is the highest quarterly disbursement. Look at the loan growth at 18.5% YOY, but 9% on a sequential basis. That drove the P&L. So your net interest income grew by 76%, operating profit by more than 200%, and that drove the PAT by more than 235%. Let's look at the asset quality. The gross NPA has reduced by 3.6 versus 4.24. Portfolio at risk has reduced by 21% to about 305 crore. But what drives the heartbeat of BFSI company? That is the return ratio. So ROA has doubled to 2.8 sequentially, and ROE has also doubled to 15% versus 7% quarter on quarter. Back to you.
Okay, Abhishek, thanks a lot for that. For me, Ujjivan, of course, came out with IPO in 2016, and from 260, it went up all the way to 520. That was a time when it was considered the best NBFC stock. After that, it got itself into a bit of trouble, and then from that point there was quite a bit of correction to 350.
It was always only demo related.
Exactly.
They came out
exactly. So they've come out of that now. So the big question is, will they get that mojo back and move into that trajectory again? But let's get back to Mangalam. He's tracking a lot of stocks today. Another big one, Nestle.
Nestle, good set of numbers, Anuj. Gross margin-led EBITDA expansion. The total income in their first quarter, they follow the calendar year, has come in higher by 10.5%. However, the management says comparable India revenue growth is 13.5%, which is the highest among all the FMCG companies that have reported numbers. And if you take a look at the margins, EBITDA has expanded by 400 basis points, primarily because the gross margins, they've expanded by about 300 basis points. So low input cost prices is helping them operationally. Net profit growth of 38%. So a lot of brokerages have pegged the Nestle target price into 5 digits now. Management commentary has been fairly positive. They saw broad-based volume growth across categories. And what excites me most as a consumer and an analyst is that the management has said they'll be adding breakfast cereals to their existing portfolio this year. They've already launched 45 products in the last 2 years. Breakfast cereals from Nestle, something must, I'm looking forward to that.
Oh, absolutely. And
more power to them.
And not only breakfast cereals, what excited me was of course, everyone's a lover of Maggi,
right,
but they have oats Maggi now. So I guess relatively healthier, perhaps.
Actually, in my house, from my 87-year-old mother-in-law to wherever, as low as it can get, we can't do without that pack.
Maggi.
Life is easy.
You can fool the entire world. You can't fool yourself. You're eating noodles. Oats noodle, atta noodle, whatever. That's not healthy.
I know, but it's easy. Life is so much easier because of this.
I guess life is about fooling yourself, right? At some point. But let's move on. Rima, what about emphasis? Seems like Nitin Rakesh has done a good job over the last few quarters.
Yes, indeed. It's the 4th consecutive quarter where the company's revenue growth is looking good. With that, they've ended FY18 with a double-digit revenue growth. So in constant currency terms, it's a growth of 11.1%. And not too many mid-cap IT companies have seen a double-digit growth, or IT companies have seen in the year gone by. And the street is quite confident that the double-digit growth should continue even in the coming year. Their operating margins have improved by 130 basis points in the quarter. In fact, on the back of an improvement in the operational performance, the company in the conference call has also upped its margin guidance by 100 basis points. So now for FY19, they expect margins in the range of 15 to 17%. So on the whole, good numbers. It's a beat, and I expect the stock to be in the green today.
Okay, Rima, thanks a lot for that. So that's the emphasis. Midcap IT has done well, of course. Apollo Tyres, the stock has rallied, but good numbers.
Good numbers. And you know what? The numbers are better than MRF and CIAT, especially the India business. I think that's something that the street would definitely like. In line with street estimates, so no major surprises either way. It's the India business volume growth at 16%, which is very strong. The European business EBITDA was hit a bit, but that's because they've been in ramp-up mode for their Hungary plant. So they've had some costs associated with that. Stripped of that, actually, the revenue growth is not bad at all, 21%. Margin growth is good. And the India business EBIT has gone up by 50%.
Okay, after all the good news, let's get to Union Bank, Abhishek.
Well, Lata, the worst quarter ever for Union Bank, whether it is in balance sheet growth or the asset quality or the net loss. So the loan growth at 0.8% is the lowest ever loan growth that Union Bank has seen. They have seen an all-time high quarterly slippage of 10,000 plus crore. What that means is that the gross NPA in absolute value has increased by 20.5%, while in percentage-wise, gross NPA is at 15.7 versus 13%. The net loss at 2,583 crore is 1,200 crore above our poll of 1383 crores. Back to you.
Okay, but I don't think the street should be shocked at all with this. This calculation was available to most of us probably mid-February itself, that every corporate-facing bank would report between 2 and 5 percentage points higher NPLs. That was always on the cards. So I guess it has been digested. Let's see how stocks react. But Rima, back to you. And this is the big announcement from RelGeo.
Yes, bad news for incumbents, good news for customers. Reliance Jio has now entered the postpaid segment with its first ever offering where you have to pay 199 rupees per month and you get 25 GB data, unlimited voice, unlimited SMSing, as well as attractive offerings on their applications, Jio apps, as well as in the international calling. Now remember, up until now, Jio had disrupted the prepaid segment. They hadn't come out with any offering on postpaid. And now while postpaid is just about 5% in terms of the subscriber base of the industry, these are usually your premium customers or high revenue customer. So the impact on the revenues of postpaid customers is close to about 20% of the industry. And that's the market now Jio is trying to crack. 199 rupees is the monthly offering by Reliance Jio. Kotak says that peers like Bharti and Idea's corporate plans for postpaid would be in the range of 399 to 499. So that's how much cheaper Jio is, and that's the extent of disruption. Secondly, Jio has also cut the international roaming rates for all its customers. So net-net, the impact is going to be on incumbents. Kotak says a revenue hit of 6 to 7%. CLSA also estimates a hit of close to about 3% for Bharti, 7 to 23% for the Idea-Vodafone merger. The only caveat is that postpaid customers are typically sticky. So yes, there will be an impact, but it could be spread out.
Okay, thanks a lot for that. As you can see, the disclaimer, Reliance is the promoter of Rel Jio, also owns the channel you're watching. But the most controversial stock over the last season has been PC Jewelers, and now they've come out of the buyback. But Anisha joins in to tell us why you shouldn't be fooled with that buyback price. The acceptance ratio is quite low. Anisha?
Well, yes, Sonia, if you look at the stock, it has been quite volatile of late, and today I expect it to maybe open in the green on back of the buyback news, but important to see how that one closes. Now, to give you the buyback details, they have decided and approved to do a buyback of a total of 424 crores, and the buyback price is 350 rupees per share. Now, remember, the stock has been trading between 200 to 250 over the last couple of days, so 350 looks rather attractive at that level, but the promoter had told CNBC TV18 earlier that they will not participate in the buyback, and that is what they have lived up to, because yesterday in the press release they mentioned that they are not going to participate. The acceptance ratio is around 12%. The stock is in F&O band. Let's see how it reacts today.
Okay, Anisha, thanks a lot for that. So a point here, normally if you go in a buyback, because you know that only 1/10 of shares will be accepted, what's your instinct? You sell in the F&O market to hedge yourself. But in this case, the stock is in perennial F&O band, so you can't short it also. So there's a good chance that, the stock does not see a big rally today. In fact, from the high point slips.
Fair point. Okay, well, we are back to pharmaceutical stocks. Ekta, the big Trump announcement.
Yes, this is going to be his first focus speech when it comes to drug prices, and obviously Indian companies are nervous because the street is fearing that there could be more steps towards generic pricing, but most of the reports online indicate that the focus is likely to be bringing down branded or prescription drug prices in developed markets which pay much lower costs as opposed to the US. So we could probably expect more on that as opposed to generic prices, but obviously the street is going to be nervous.
Okay, well, let's get back to the telecom space. Reema, you're watching out for Tata Com. Post the numbers.
Yes, it's a disappointing quarter by Tata Communications. The revenues have declined by 2.6% on a quarter-on-quarter basis. Two key reasons. One, their voice segment continues to see pressure, and data growth. The company was banking on data to provide that growth fillip to Tata Communications, but that hasn't played out. So data revenues were flat. Margins too have contracted by 100 basis points in here. It's the data margins which have been under pressure. Not just that, the company has also reported a big loss of 121 crore. Yes, while there is weakness at an operational level, there is also an exceptional item of 162 crore, which is hurting the bottom line.
Okay, so that's red for Tata Communications. Anisha, can we wrap it up with a few others?
Well, yes, I'll start with Adani Enterprises because there the performance is below estimates. The coal trading volume was lower than expected, and the result can be seen in the numbers as well. The revenue is down and the profit came at 180 crores versus an expectation of around 220 crores. ITD Cementation, well, after a lot of quarters, we have seen a strong revenue growth coming from the company, 25% on the top line. However, the margins are lower. The profit has doubled on account of other income, but I think the street would be enthused by the revenue number itself. Laurus Labs, well, the revenue growth has been steady there, but the margins and profitability have taken a hit. Remember, the margins depleted by 300 basis points, and the profit is also down around 37%. Expect a red tick on that one. Shankara Bill, that one has been quite a bit of wealth generator, but the good performance continues in retail business this time as well. The revenue is up around 27%, the profit up around 16%, so green one on that. Lastly, on Bharat Bijli, the profit looks exponentially higher at 48 crores versus 6 crore that they reported last year. But remember, there's an other income element of around 46 crores. We might see a green tick on that one on account of the exponential number that we saw in the bottom line.
Okay, Bharat Bijli has been a big favorite with investors over the last 1 year. Thanks so much, Anisha, for that. Here's a quick recap now of our top stocks to watch. Expected to gain today are names like Magma Fincorp, Asian Paints, Titan, Z Entertainment, Ujjivan, Nestle. It was actually quite a good day for earnings yesterday. Emphasis, Apollo Tyres, PC Jewelers could gain but eventually could be in the red. Acceptance ratios quite low as well. ITD Cementation, Shankara Bilpro and Bharat Bijli. While stocks expected to be under pressure today, Canara Bank, Bharti Airtel, Idea Cellular, Union Bank, Tata Com, Dr. Reddy's, Sun Pharma, Lupin, Cipla, Adani Enterprises and Laurus Labs.
All right. Before we wind up and take a break and come back with our technical experts, just listening to what the big investor Rakesh Jhunjhunwala said during the Titan conference call on the Favor Luba investment.
You believe you'll make money in Favor Luba? Yes, of course we will, but it will take us a while. It will take us at least 5 years before we start making money. What is the kind of money? Because it is my perception he is putting bad money after good. So therefore, I want to know what is the kind of money the company intends to invest in it. It's my opinion, I am right or maybe I will be correct.
No. As of now,
I'm concerned what kind of investment we are going to make.
As of now, order of magnitude of 200 crores or so.
Further.
Before we see, when we can see the business, business model working, only then we would take a decision to make larger investments.
So 145 you have invested, 55 you want to invest further. Or 145 you invested, 200 you want to invest further.
No. Total 55. Including 145.
So 145 invested, after you invest another 55, you will take a decision whether to invest further or not.
That's correct.